Tracy, let's start off with mortgage rates because that's really kind of the big buzz this week when we're talking about real estate and housing everywhere. Everybody's talking about mortgage rates.
So the last two weeks are just really since the first of the year, right? We've been watching the stock market, we've been watching interest rates, we've been checking out all the stats and what's going on. Interest rates have jumped up, and the basis points that relate to it don't relate to it too much, right, Tego?
Well, when you look at what the Fed's doing, everybody says, well, the Fed is raising rates, so that's going to raise mortgage rates. That's true, but there's not a direct correlation; it's an indirect correlation. But and that's just it. The Fed hasn't raised the prime rate yet, but yet mortgage rates have gone up in anticipation of higher cost of money.
The Fed saying that they're going to be increasing the rate, perhaps several times during the year, has really caused a lot of movement in a lot of different markets.
Yeah, no, for sure. And so in the mortgage world, we're seeing about 3.75 mortgage interest rates, which, if you go back, I think we hit a low in 2021. That's one of the records for the year at 2.6.
Don't give it away yet.
Oh, okay.
Okay. Go ahead.
2.65, I think was. People were getting rates. I heard people getting rates even lower than that.
So that was January of 21.
Yeah.
When we had a record of rates, and we're talking 30-year fixed rate mortgages, because obviously a 15-year or a 20-year we're going to be even lower than that. So what we consider most borrowers do a 30-year loan.
Yeah.
So
well, especially with the cost. If you do a whole cost benefit analysis of getting a higher rate and spreading it out, or getting a little bit lower rate and condensing it, there's a lot of different thinking on that. But just to give people an idea, I mean, rates are somewhere around 3.5 to 3.75, and that's dependent on the type of program. If it's FHA, if it's conventional. Obviously the quality of your credit makes a big difference.
Totally.
But it's so funny that we're talking about 3.75 as high mortgage rates.
So when we were just talking about 15-year rates, so 15-year rates right now are lower, right? They're somewhere probably just around 3.
About a half point, maybe 3/4 of a point. Again, it really depends. But yeah, so everybody needs to do that analysis when they're looking to buy or refinance on a mortgage, and work with a local lender that's an expert and can really guide you through what the best program is for you.
So Tigo, I had this interesting conversation this week, and it was, interest rates were up about a half a point for somebody who was looking to be a buyer.
Yeah.
Right. And we were doing the math on what was that in real numbers based on their purchase price. And in real numbers, it was about $70 more a month in a mortgage for them.
What was the price point on the house?
It was around 3, I believe.
Okay.
So don't quote me, but it was somewhere.
That sounds about right. Sure.
I know that their increase because of the mortgage rate increase was about $70 a month. So we were talking about it, and I have to remember, having been a real estate professional for 19 plus years now, that I keep going, oh my gosh, it's still so low. Everybody shouldn't freak out that we're at almost 4, and we're probably going to be at 4 before long, right?
Yeah.
And so I was telling the story about Jane Way, who's on our team, and she's my sister. And back in the early 80s, she camped overnight in Minnesota. I believe it was even winter in Minnesota. Interest rates at the time were around 18%, as I recall. And she camped overnight for a 12% first-time home buyer interest rate to help first-time home buyers get into homes. And luckily, she got there early enough, and she was one of those that was able to take advantage of 12%. So when we're talking 4%, I always have to put it in perspective and remember not everybody's been through those 12 to 18% years.
Exactly. I mean, you think about the millennial generation that grew up during the housing bubble, that grew up, obviously, came of, the millennium. I mean, obviously that's why they're called millennials, but that generation, I mean, that's all they've seen. They've always seen sub 5% mortgage rates, right? So
19 years ago when I got into real estate, We were in the 7.5% range for quite a few years. My first many years in real estate.
Yeah. And so, the whole idea, the whole thing about mortgage rates is, all indications are that they're going to continue to go up this year. There may be a pullback. I've followed some economists that think maybe they'll pull back. Who knows, but it's a whole idea. What I just want to say is, mortgage rates and cost of homes versus renting and cost of renting, you just have to do the math and see where it works better for you.
Absolutely. So doing the math and knowing what you're comfortable with and how interest rate fluctuations can help or hurt you, and knowing when to lock interest rates, right? That's one of the best things about working with a great local lender, right? Because they look at these rates every morning, and they might, if you're going to be under contract, you typically don't lock your interest rate like the day you find your perfect house, right?
Right.
You usually are talking to your lender, and they're watching rates, because rates can fluctuate intraday. Right?
Oh, for sure.
So they'll call you and say, hey, interest rates just dropped 1/8 of a point. You might want to consider locking today. And so having a great local lender who's working on that for you is pretty important.